welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. And we also got you Buy Now, Sell Now lens. But before that, let's have a look at what the markets are up to. So Cheryl, not a great action on the benchmark indices, but the bank nifty is seen to be making a comeback.
Absolutely. Very good morning to you, Shrishti. And if you look at the action on the benchmarks, there is action actually in the benchmarks as well, because we have actually recovered very smartly from the day's lowest point. As you can see, the markets are at the day's highest point as we speak. No doubt, flattish move coming in, but given the fact that we did dip significantly into the negative territory. Nifty Bank outperforming the benchmark indices, holding on to gains of about 0.3% as we speak at the day's highest point for Nifty Bank as well. Let's take a look at what are the individual sectors and the stocks that are moving in trade. You have Coal India. That is the top gainer on the Nifty, 3.5% uptick coming in for Coal India. We will talk in depth about what is exactly happening in the power sector as well in a short while for now. Also, you have L&T, Tech Mahindra, UPL are the other set of gainers in trade today. Talking about the flip side and the losing end of the market, you have Tata Consumer. Remember, in the last half hour of trading session, you saw the sharp spike coming on the Tata Consumer, and right now you've seen it actually in the negative territory, 2.3% downtick coming for Tata Consumers. Top loser on the Nifty, Ultratech, Britannia, Sun Pharma, as well as Cipla are the other set of losers in trade. Talking about sectoral indices then, and in the sectoral front, you have FMCG that is actually taking it easy in today's trading session. 0.3% downtick coming in for the FMCG index. Also, Pharma also is down in trade. But on the flip side, you have the PSU Bank index, smart up move, 1% uptick coming in for PSU Bank. Realty, small cap, mid cap, all of them seeing good gains in trade today. So that's the way how the markets are looking like at this point in time. Yes, you have the benchmarks that have sharply recovered from the day's highest point. But today, let's put the spotlight actually on holding companies. These companies will be in focus given the fact that you had SEBI that floated a consultation paper on voluntary delisting norms last month. But what does this have? What the impact will be on the holding companies, and what can we expect going ahead, and what does it mean for you if, as an investor? Let's bring on board my colleague Somit to actually explain that to us. And Somit, yes, holding company, one topic a lot of us know least about. If you could first shed your light on what are holding companies, what's the importance of holding company, and then let's follow on with what SEBI consultation paper is.
So basically, a holding company is a company which owns controlling interest in other listed companies. Like for example, there is Kalyani Investment, which is listed as a promoter in Bharat Forge, Haikal and BF Utilities. So that's what a holding company is basically. Now, what does this new paper tells us about? So I'm reading it through this because it's too complicated and just for the benefit of viewers and given the fact that there should not be any ambiguity here. So what does this paper say? Now, SEBI had floated a consultation paper on voluntary delisting norms on August 14. Now, this paper was open for comments till September 4th. And now, given the fact that it has the comment part is now closed, the final paper could come in the next few weeks or a couple of months there. But it will come out, that's for sure. Now, the final paper from SEBI will have the proposals listed in this draft consultation paper, but not necessarily it will have all the proposals that were there in the draft paper, but most of it should be there given the fact that it was floated by the side of SEBI at first. Now, what are these proposals and why we are speaking so much about this? Now, there's a proposal on the new delisting norms for delisting of investment holding companies. That is the holding companies that we were just mentioning, like Kalyani Investment. Then there is Bombay Burma also, which has stakes in Bombay, in Britannia as well. So these are the holding companies, and there is a proposal given for delisting of these holding companies. Now, what does this proposal say? Now, this proposal says that the holding companies can get a share of the company in which they have an investment. In this case, if Bombay Burma has an investment in Britannia, they can get Britannia shares. Kalyani Investment has investments in Bharat Forge, BF Utilities and Haikal. They can get shares directly in these three companies.
This is by default. You will not have to ask approval of the board.
So yeah, earlier there used to be two things. Now, if a holding company wants to issue shares of the listed company, then they had to take permission of shareholders of Bharat Forge as well. So, say, for example, Kalyani Investment wants to give the public shareholders of Kalyani Investment the shares of Bharat Forge, then they have to take take approval from Bharat Forge public shareholders as well. But this proposal, if it gets approved the way it was said, then they did not to take any approval from Bharat Forge shareholders. The approval is required only from the board, from the shareholders of Kalyani Investment, public shareholders of Kalyani Investment, by passing a special resolution, and from NCLT, which is most likely to go through. These three approvals are most likely to go through, but the board has to approve first. So what does it say is that these listed holding companies are to be given shares of companies in which they hold stake. Now, this will be done provided they derive nearly 75% of their fair value from their investment in these listed companies, and shares will be given in the proportion of holding company share. Now, this is the second most interesting part, and this is the reason why we are more talking about this proposal that has come forward. Now, for example, if we consider Chola Holding is a listed company and they own shares in Chola Finance. Now, Chola Holdings, if you see, the total outstanding share base stands at around 18.8 crore shares, and Chola Holding has around 45.3% stake in Chola Finance. Now, Chola Finance total outstanding share base is around 82.24 crore, but Chola Holding has around 37.3 crore shares in Chola Finance. Now, to put it very simply, Chola Holding has a equity share base of 18.8 crore and they own around 37.3 crore shares in Chola Finance, that is the other listed company of the IE. So based on these number of shares, the shareholding ratio or the proportion on which they will be given Chola Finance shares will be for every 1 share of Chola Holding, the shareholders will get 2 shares of Chola Finance. That's how it goes, because they have an outstanding base of 18 crore and they own 37 crore. So it's double. Hence, they'll get 2 shares of Chola Finance. Now, why is it interesting? Because the discount, if you see, for Chola Finance, Chola Holding 1 share is costing you 1,000 rupees, and if you get 2 shares of Chola Finance, that is 1,000 rupees each. Exactly, the value doubles for them. And that is the reason why we are talking about it, and that's the reason why it is interesting. But will the promoters do so? Because it is finally, this proposal has to come from the board side, and then only you will go for NCLT approval and shareholder approval. So there are less chances of promoters going ahead with this, because firstly, this is an option of delisting. Right? There is no compulsion for them to do this. And they will most likely not do this, because if suppose Chola Holding public shareholders get more shares in Chola Finance, obviously the promoter holding is expected to dilute. So that will give them less controlling stake in the main company. So less likely they will not do so. But what Macquarie's sales team believes is that this could at least lower the holding company discount that we are currently seeing.
Right.
Because if you see these holding companies, they are trading at a discount of at least more than 50%. So this could further come down going forward, because there is now this option where the public shareholders of the holding company can directly get shares of the listed company. So that is why it is interesting.
Right, but for investors, it will be a win-win, isn't it?
For the holding company investors, obviously it will be a win-win. Not necessarily for the companies in which they will be getting shares, because for them, the stake for minority shareholders also there will be a dilution, because new shareholders will be coming in.
Right. So basically, this is just a consultation paper for now. We are yet to get
final approval
is yet to come in. But yes, isn't it an interesting development?
Because if you see the Kalyani investment, for example, that we were talking about, that's trading at the value of Kalyani investment is at an 87% discount compared to the value of the stake in the listed companies for Bharat Forge, Heikel, BF Utilities.
In fact, I'll ask Abhishek to actually show the line graph of Kalyani investment as well as Bharat Forge to actually kind of understand what point you're trying to make, the discount that Kalyani investment is in compared to Bharat Forge. So in that way, you will be able to understand better. So Kalyani investment currently trading at around 2,600.
But that's not how we should take it. We should look at the market value.
Market value.
The market cap of Kalyani investment is close to 1,100 crore rupees. But it owns stake in Bharat Forge, Heikel and BF Utilities. And the combined value of the stake is 8,600. Or we can just look at the companies like Kama Holding. Now, it has only one investment, and that is in SRF. Kama Holding is the promoter company of SRF, and Kama Holding's market value at this point is close to 11,000 crore rupees, while the value of its stake in SRF is 36,000 crore rupees.
Right, understood. Yeah, so that's the way how one
70% discount. So that could narrow according to Macquarie's sales team. So let's see.
But Soumit, other than the couple of examples that you highlighted, are there any other interesting holding companies that has come on your
There is a list of it. There is Bombay Marba, there is Pelani, there is Zuari Industries. These companies are trading at a discount of nearly more than 80 284%. Then there is Bajaj Holdings as well, which is trading at a discount of 47% to its value. Maharashtra Scooters, which is trading at a 61% discount. Then there is TVS Holding, which is trading at a 68% discount. Chola, I was talking about Chola Holding, has investment in Chola Finance, and that is trading at a discount of nearly 54%. There are many companies that is there. There is Tata Investment as well. So a host of companies that are present in front of us, which are trading at a deep discount. And currently they should trade at a discount because there is no scope of the promoter companies selling these stakes. So there is no way to monetize them, and that's the reason they trade at a discount. But given the fact that now there is an option for these minority shareholders to get a share in the main listed company, the holding company could come, discount could come down.
Definitely an interesting development that we all need to watch out for actually when it comes to the SEBI consultation paper. And like Somit said, is the consultation paper is just yet to get the final approval for that. Thank you so much, Somit, for joining us and putting all of this into context and helping our viewers understand, in fact, helping us also understand this better. So yes, that's an ET Now Insight, ET Now Spotlight on holding companies. But let's also talk about what is exactly happening in the power sector, because we all know the power sector has been having a great run for almost 3 weeks now that we've seen a sharp up move coming in the power sector. But yesterday also you had Power Ministry actually talk about the surge in the power demand. But how will the surge in power demand play for the or impact the power companies? Let's hear out the editor's take.
So let's simplify it for our viewers. One is the impact, and second is individual stocks. What has happened is, because August was a very dry month this time because of delayed monsoon, and the air conditioning penetration, our comfort which we require in terms of electricity demand, all that is increasing. As a result, in the month of August, the electricity demand has shot up, and there seems to be mismatch in what the total installed capacity is versus what the sudden demand is. Now the sudden demand could be erratic, and that may not sustain. And now that things are normalizing on the weather front, the demand will come down. But meanwhile, when you see such a large uptick in demand, what happens? Indian power sector, Avan and Aisha, I'm going to try and simplify it for our viewers. Hope I'm able to do that. You have utilities, NTPC, Tata Power, Adani, they generate power. They're power utilities. They sell by two routes. One is PPP, which is that you've entered into long-term agreement with the buyer, and that is a fixed contract for many years. And 75 to 80% of the broad capacity in India is locked in that. Remaining is what is called as you can sell in the open market. That is what you use, that is called as merchant power. Now the demand has gone higher. You cannot change the price at which long-term contracts have done, but you will definitely get an advantage in terms of merchant power pricing. So companies which have a high exposure to merchant power pricing are the ones they will hit a jackpot. Why will they hit a jackpot? Because your realizations will just go multifold. Your cost of production is same, your realizations they go higher. What happens? You make more money. So the theme to buy, I think for next couple of days, would be companies which have a high exposure to merchant power. And I think that is a theme which I think could be a warm theme, could be a charged up theme. Some stocks have run up, but looking at the way our trend is moving, I think we are in for a bumper quarter for companies which have a high exposure to merchant power.
Okay, so that's the editor's take on the power stocks, and recently we have seen all these power stocks skyrocketing in terms of the move that we have seen in the past 1 month. So let's get the expert take and the stocks that you need to be keeping on radar from our technical expert Kunal Bothra, as well as Sneha Poddar is on the fundamental side, is also joining us on the show. Very good morning and welcome both of you. And Kunal, let me come to you first on the technical charts. Any power stock that is looking interesting to you, because there has been a surge, there has been supply constraints, and we have seen good moves in both of these counters. But for today, majority of the stocks though are trading flat, but in the short to medium term, do you believe that there's more upside in any stock that you want to pick up?
Well, yeah, I would believe that most of the power stocks are still looking very attractive on the charts. Whether it's the traditional names like NTPC, etc., Coal India, which is I think given a breakout about the 255 mark, which was the major hurdle for the stock. Even the power finance names which you've been highlighting, those have been looking very attractive from long-term play. Power finance, REC, etc., have been looking quite strong. The traditional power stocks like Torrent Power, even those stocks have started to pick up pace. Tata Power has also come back about the 250 marks. So it's when a sector gets into a very strong uptrend, there are many candidates which emerge as a potential breakout. Now there are some which could lead, some which could lag. That's how trends generally shape up. In terms of an current perspective, I would probably believe that Tata Power is something which at 250 plus levels looks attractive from a short-term trade. Would look out for in a target range closer to 275 for the stock over the very near term.
All right, so that's the take coming in from Kunal on the power sector. But Sneha, coming to you, power sector has actually been powering ahead for almost 3 to 4 weeks. At least for the last 1 month or so, at least power sector has been in favor. But now we are seeing that the power demand has also peaked. How do you think that this actually bodes for the power companies? And do you think you can still look at these companies as an investment, or do you think the cycle has now actually reached its peak?
Okay. See, what I believe is that the power demand is likely to stay high because so far, I mean, like, the outlook on the monsoon is still like, it's supposed to be a little subtle only going ahead. So the demand, obviously, for the power would remain high for next at least 1 to 2 months. And in fact, like, with the kind of government commitment which is there with regards to the, 24 by 7 power supply to all homes, so that clearly it augurs well for the overall power sector. So we believe that while there was a belief that probably the renewable energy would take over the the fossil fuel power plants, probably this thing would be put to rest, because with the poor erratic monsoon and all, the renewable energy side is seeing a certain kind of slowdown. It has not been able to pick up as it was anticipated. So the demand for thermal power plants would definitely stay for at least next couple of years. In fact, if you look at worldwide, China has increased its dependence on the power plants. It has recently commissioned 2 thermal power plants, uh, and it plans to add furthermore. In fact, of late, around 14 countries have added power plants in last 1 year, while 8 more countries have announced their projects and plans to add more thermal power plants. So clearly the focus is there on increasing thermal power capacity, and thus keeping this in mind, we believe that Coal India is one stock which investors should really keep an eye from a 1 year perspective, because the demand for coal will definitely stay there. In fact, if you look at the coal inventory, that has dipped recently given the peak power demands, and even going ahead, we believe the trend would stay for the the coal requirement. So Coal India definitely is our one of the topic in the this space, and given its valuations, we believe it's pretty attractive even at this level, and we have a target price of 300, which one can actually look at from 1 year perspective.
Okay, Coal India is the top pick coming in from Sneha, and Kunal also shared his picks. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, it's time to take all your stock-related queries, so stay tuned for more.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can tune in to us or write into us on the WhatsApp number that is on your screen. Do mention your name, also your stock that you're looking to invest in. If you've already invested in the stock, then mention the buy price, the quantity, as well as the time horizon. That way, our experts will be able to help you better. Talking about our experts, today we have Kunal Bothra as well as Sneha Padar. Once again, good morning to both of you. And let me kickstart taking the queries then. And the first one that I have is coming in from Krish. And this one is for you, Sneha. He wants to add Astra Micro in his portfolio, given the fact it's consistent returns, but the promoter holding is just 7% and public holding is 71%. Can you help him on this? Because he's looking for 50% above as a criteria while investing in a particular company. I believe public holding around 50%. He's not specified which one he wants 50%. But yes, what's your take on Astra Micro? Do you think that this one fits the bill to be in a portfolio for a long-term investor? Shrug off the fact that if it's about the holding?
See, I don't have as such any view on the Astra microwave, but definitely he can actually, continue to. I mean, he can look at investing in this stock because the kind of the traction which is coming in the defense space, the kind of order book that these companies are building up, it's really tremendous. So at least from a medium to 1 year perspective, he can look at holding these stocks because the revenue visibility is clearly there. So yeah, the low promoter holding is a little concerned, but then uh, he can at least avoid holding from a very long term perspective. But yeah, medium term, he can definitely look at it.
Astra Micro is the word coming in from Sneha. What's your take on this one, Kunal? Given the fact that Astra Micro is also a pack of the defense sector, has moved in tandem with what rest of the defense players have done, do you think it merits a buy and stay put?
I strongly think that it's a buy for many of the defense names, including Astra Micro. I think it's a very strong up move, which we've already seen for many of the stocks in the space as well as the stock. It's today, I think, given a breakout of a 3-month or a 4-month consolidation above that 400 mark. So even that could probably be one of the major reasons why you can consider buying the stock in terms of timing it, especially on times of a breakout like what we've seen today for the stock.
Okay, moving on, and Kunal, once again coming to you. This one is from Rajesh Maheshwari, and he's holding 150 shares of Global Spirits at a price of 1368 rupees. In the recent while, we are seeing these liquor stocks performing well, but he's at a loss in this one. He just highlighted that a short while back, this counter was at 1300, but now seem to be drifting lower. So at this point in time, what should he do? Should he continue to hold on?
Well, I would not recommend to hold on to the stock now. There could be a reason why the stock may be into an underperforming zone, because it's broken past below the 50-day moving average as well as the 200 moving average. Also, I think it's just about in touching distance of breaking below those levels, and that may not be a great sign for the stock price. So I would consider to exit the stock. You have better alternatives in the same space. So I think United Spirits has been looking exceptionally strong. The moment the stock had broken past about that 900 levels, United Spirits has managed to inch up significantly high, I think more than 15% from those levels at least. Even Som Distilleries is another stock at 320 odd levels where it's trading right now. Looks as an attractive bet. So you can consider shifting to either of these two names, or maybe equal exposure to both of these stocks.
All right. Let's take the next one. This one's come from Deepak. Apologies, Deepak, we couldn't take your queries. I know you've been writing to us day after day. We've not been able to take your queries. Apologies for that. And Deepak is writing to us from Dubai. He has 200 shares of Wipro at an average cost price of 607 rupees per share. He's been holding on to this for nearly 2 years now, Sneha. He wants to know now, what should he do? Stay put with this, exit, or exit and look to buy some other IT companies altogether?
We would suggest to exit from this counter because, the kind of, post the management change, the company had implemented a refresh strategy, which actually has not really worked out for the company. At least it's not reflecting in the improved financials. So, though the valuations are attractive, but still we believe that it would be better to exit from this counter and move to better names like probably in large cap TCS or Infosys or HCL Tech, or if he's looking at mid-cap IT, then we would suggest Persistent or LTTS.
Okay, moving on, and Kunal, the next query is from Meghna from Bangalore. She wants an advice on Kalyan Jewellers. Will this be a good bet for short-term gains? And she also bought Electronic Smart India at around 70 rupees. So should she exit at this point in time or continue holding on?
So I think Electronic Smart India is EMIL, if I'm not wrong, recently listed name, trading at 140 odd levels. I would believe that it's a good time where you can look to buy the stock if you are considering to buy, because I think it's retraced some 10% from its previous highs of 160. So could be a good time to start nibbling into the stock price. Kalyan Jewellers, I would be a bit hesitant to buying the stock, because the stock has already moved up significantly high in the last 6 odd months, now at 240 plus levels, already at a fresh high for itself. So because of the way the momentum has shaped up in just the last 6-9 months for Kalyan Jewellers, I would be a bit hesitant into recommending a buy. Maybe if there is any kind of a patch of consolidation or a correction, that could be a good entry point.
All right, the next one that I have is coming in from Venkat. He's also writing to us from Dubai, and 1,000 shares of KG Denim. Kunal, do you track this one by any chance?
No, not really.
All right, so let me give that a skip, and then I have another one that is coming from another viewer of us who's actually writing to us from Dubai, and this one is, I believe, Kritika, who had given us a query. Yeah, Kritika, who's writing to us from Dubai as well, and she wants to know short-term view on NHPC, Kunal. 500 shares at a price of 53 rupees per share. Also, if you could provide a short-term view on JSW Steel as well, can she look to buy at current levels?
So extremely bullish on NHPC, and I'm not sure by short term how much time frame you're looking out for. But when these kind of PSU names, when they get into a breakout, we expect that the breakouts should last for at least another 6 months or 9 months. And NHPC has been a bit of a mixed bag stock in terms of a beta nature. So sometimes it's high beta, and sometimes the stock goes into a very low beta kind of a range. So I'm expecting that this time around it could be a very low beta or a moderate beta up move for NHPC. So the time frame matters over here. If it's restricted towards 1 to 3 months, then maybe you can expect another 10% upside for the stock price. But if you can expand your time horizon to much higher than that, then I think the upside potential could also increase for NHPC. JSW Steel, so I'm extremely bullish on the entire metal pack, and I believe that these stocks have just started to show signs of a very strong breakout. Tata Steel, JSW Steel, Hindalco, Hindustan Copper, NMDC, etc. These are the names which you've been flagging off time and again. But I believe that even after a patch of a mild correction in the last 3, 4, 5 days for these metal stocks, I believe that the second round of uptrend is yet to begin for the stock price. So JSW Steel stands out to be one of the formidable names from the metal pack. I would suggest a buy.
Okay, moving on to the next one. And Sneha, what's your advice on Titan? Guru Prasad wants to know at this point in time, is this will that be a good bet to enter Titan for the next 2 years investment horizon?
See, if he wants to enter from a next 2 years perspective, then definitely he can start entering at this point. He can start investing at a staggered fashion, because it's a good portfolio stock. It's a kind of compounding stock for the long-term investors. With the kind of strong earnings growth visibility, we are very confident that the one can really hold on to the stock from next 4 to 5 years perspective, definitely.
Kunal, we did speak about the defense counters. You said you are bullish on them. Suraj from Kochi has BEL, 1,000 shares at a price of 127 rupees per share. He wants to know whether he should look to book profits, accumulate 1 year horizon.
Look to accumulate, but that doesn't mean that you can buy at current levels. I believe that 125 to 27 mark is actually a good support zone for BEL. If I'm not wrong, the entire month of July as well as August, the stock was hovering at this support zone of 127 approximately. So if you happen to buy this, if you're looking to buy the stock or accumulate further, look for these strong support zones where the stock halts or stalls a correction. That's a good buying range for BEL.
Okay, that's the view coming in on BEL. But with this, viewers, with this, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. So stay tuned. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. Today we have Kunal as well as Sneha to guide you better, and the next query that I have is coming on Polyplex Corporation. And Sneha, Narayan from Chennai has bought these shares at an average price of 1660 rupees at current market price. What to do? He's sitting at a loss in this one, so should he just book out loss or and move to some other counter or continue to hold on?
Sorry, I don't cover this stock.
Okay. Kunal, anything on the charts?
Well, I would refrain from buying the stock or recommending to buy the stock at current levels, because it's consistently making a pattern of lower highs and lower lows. I think over the last many months we've received this the query on the stock, and even from those levels of 1400, the stock recently was almost at 1100, 1110 mark. It's now bounced marginally towards 1200 mark. So till the time the stock doesn't break past above that at least 1400 levels, I would suggest not to average or add.
Okay, the next one is come from Pratiksha from Oman. Kunal, is it the right time to enter into rice stocks? And she's saying if yes, then which one is better among Kohinoor, LT Foods as well as KRBL?
So KRBL and LT Foods, that's Dawat for the NSE symbol, both of them look attractive. Buying these stocks at current levels may turn out to be a good play, but the only catch is that these stocks have already gone through a lot of news flow and breakout for themselves. So, in case if these stocks they get into a reversal, you'll have to be a bit more discipline to try and exit the stocks. So I would advise that even if you're going long into these stocks or you're looking to buy these stocks, keep the position size a lot more less than what your average position size could be.
Okay, the next query, Kunal, is from Satya Veni, and he's wishing all of us a very happy Janmashtami. So happy Janmashtami to you, Satya, as well. And Kunal, he says that he's a huge fan and he's a long-term investor. So wants to know your take on Som Distilleries as well as Sula Vineyard. Would you advise to enter both of these counters at current market price?
Thank you so much for that. First of all, for the two names which you've mentioned, Som Distilleries as well as Sula Vineyards, Som is something which looks attractive. SDBL, I think, is the symbol on NSE for the stock. Looks attractive at 320 odd levels. Has done exceptionally well over the last 1 year. I think from sub 200 levels, if I'm not wrong, 150 odd levels is where this rally started off for Som Distilleries. It's now gone past about 300 levels, and it looks a lot more structured on the upside. So I would recommend that as a buy. Sula Vineyards, the history is a lot more limited in terms of the prices. But then even this stock has been looking very attractive, more consistent. The volumes have been on and off for the stock price. But just based on the price consistency, you can go for a buy on Sula Vineyards. But Som is something which has a higher degree of history in terms of price. So I would be a bit more, the probability over here is a bit more higher.
All right, this one is coming to you, Sneha, and this one is coming from Sudha, who's a regular follower of our channel. We couldn't take her query yesterday. Today, she wants to know about the fact that she wants to have 20% more allocation to equities. She's asking whether she should be more bullish on metals, pharma, or large cap IT counters for the longer term, for the shorter term, say around 1 to 2 years, and also if out of these sectors, which one should she look at? The stock, I mean.
Okay, from for 1 to 2 year perspective, then she should definitely look at PSU banks, some of the auto names, and some of the IT counters. Apart from this, she can actually look at actively on the EMS side, which is electronic manufacturing space, like Kane, Sirma kind of companies, and also towards the defense and the railway space. Basically, the capital goods space is one space which would keep on buzzing from next 1 to 2 years perspective. So there should be some allocation towards the capital goods sector, some towards the PSU names, and probably some towards the auto and the consumer names.
Okay, moving on to the next query then, and Kunal, the next query is from Balan, and he recently bought metal counters like SAIL and NALCO, as well as sugar stocks like Renuka Sugar and Awadh Sugar. Now they are declining, and what to do at this point in time? What's your outlook on the metal counters as well as the sugar space after seeing a decent run up in the recent while? So, good time to book profits or continue to hold on?
I would suggest to hold on to these stocks, even though these stocks are a bit off in terms of price action. I strongly believe that sugar as well as the metal counters, both of them look very attractive. Many of the stocks in the space have given breakouts on the medium as well as on the longer term charts, and many of the stocks are also getting into a strong recovery phase. So both the sectors look attractive, but you also have to remember that these are high beta stocks, high beta sectors. So they are bound to get into a high period of volatility. If the markets get into a slight correction, the correction into these stocks could be a lot more sharper because of the beta nature of these stock prices. So you have to have that catch or caveat in the mind. But if you are looking to trade these stocks and looking to ride the trend, I think it could be a good time where you can do that for both sugar as well as metal names.
All right, this next one that I have is coming in from Ajay from Delhi. And Kunal, once and for all, let's answer about defense counters, because we've already had 2 different queries on defense. We have Ajay from Delhi asking whether he should invest in Bharat Dynamics as well as Global Health as Medanta for a period of 1 to 2 years. And not just him, we also have the other one from Anant also. He wants to know 2 defense counters where he can actually go ahead and invest lump sum amount and at what levels.
See, I would not advise lump sum amount at current levels, because even though these stocks are in the fancy of many traders, investors, you have to look out for trying to buy the stocks at a an apt price where the support is more stronger, rather than buying these stocks when they are in a lot of news flow. So I'm bullish on the sector, but that doesn't mean that you go all out into the stocks at current levels, because what you're talking of is stocks which have already run up 3x, 5x, maybe more than that in the last 1 to 2 years for many of the stocks. But out of the names which I'm bullish on, BEL is something which looks attractive. I think at 127, which we discussed some time back, it could be a good buy. BEML is something which you can keep on your radar in terms of the stock from long-term play. HAL has been a stock which has been a lot more consistent in terms of price trends. So these are the few of the names which you can consider buying. But as I said, don't buy bulk at current levels. Look to buy it on staggered dips.
Okay, Kunal, one more query on the metal space, and that's on National Aluminium. Bharadwaj from Coimbatore wants to know, can he buy National Aluminium at current market price, looking to hold this for the next 2 to 3 years?
Well, yeah, you can consider buying the stock at current levels. I think after a 15% kind of an up move from 88 rupees to 106, the stock is trying to get into a consolidation or a correction. So from 106, it's come back towards 99. Maybe in this wave, the stock can extend the correction towards 96 mark or 96 and a half odd levels. That could be one of the major supports for Nalco. So you can start buying at current levels. In case if it dips down towards 96 mark, look to add further.
Alright, so that's the take coming in on Nalco. But on that note, we slip into a break on this edition of our Buy Now, Sell Now. When we come back, we'll continue taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries. This one is coming from Alma D'Souza, and this one is for you, Kunal. Both the stocks, I don't know whether you have a view on it. Vodafone Idea and as well as Pilani Investments. She has 10% profit on both of them. Should she hold or look to exit both of them? Given the fact that she's making profit in Vodafone, do you think that she should exit it?
Well, I would consider yes, good time to exit the stock, even if it's trading at 10.5 odd levels. And I think yesterday or day before, there was a strong price action for Vodafone Idea, because I would probably sense that this could be more of the mid caps and the small cap frenzy which could be going on. So either you can maybe keep a trailing stop loss of say 9.5, which is the 2-day, 3-day swing low for the stock as a stop loss, trailing stop loss. But if you want to consider booking the profits, it may not be a bad decision. Pilani Investment, on the other hand, I think the volumes are a lot more illiquid. So in such kind of counters, if you get 10% kind of an uptick or profit, good time to book our profits.
Okay, Sneha, the next query is coming from RS Mundada from Pune, and he wants to know, is this a good time to enter NHPC as well as Dhanlakshmi Bank? So your advice on the same.
Yeah, NHPC definitely you can look at entering at the current valuations, because the valuation so far has not become super normal expensive. So the kind of potential that these companies hold is really good, and there's a clear visibility from next few quarters perspective. So he can definitely look at entering. Dhanlakshmi Bank, I don't have a view, but in case if he is looking at the smaller bank names, then we would suggest Canara Bank, wherein the valuation comfort is really high. And this is one of the banks wherein the asset quality has really improved a lot. And we believe that the company would, the bank would really benefit from the kind of loan growth potential that is coming from the capex upcycle. So Canara Bank really holds well with the kind of we're expecting the return ratios to improve to almost 20%. So the valuation wise, comfort is pretty high.
Yeah, actually one more coming your way, and this one is coming from Vivek. He's been actually asking these queries for a couple of days actually now, and he wants to know, among the newly listed IPOs, fundamentally, which one do you think stands out for him to buy right now for the long-term investment?
Among the newly listed IPOs, probably he can look at if he's considering for last 1 year, then Zomato and Paytm, we are really pushing ahead, because therein we are seeing traction in terms of numbers. The companies are turning around, and the clear visibility is there on their future growth path. So those two companies which we are really pushing. Otherwise, he can also look at these newly listed companies like Cairns, Sirma and all, because the overall the EMS space is buzzing, and for the next 4 to 5 years, the growth potential is tremendous. The kind of Make in India plan the government has, and the kind of support that the government is providing, definitely the earnings potential from here is multifold. So yeah, these counters I would suggest to enter.
Very recent one, because I believe his query is on the very recent one like Aeroflex, or even you know how you have Vishnu Prakash also that listed two to 3 days ago. Have you covered any of these counters which have just listed over the last 1 to 2 months?
See, Vishnu Prakash, he can look at like entering this counter. It's a very small construction company based in Rajasthan, but then given the kind of niche projects that he works on definitely he has the capabilities, and given the kind of almost debt-free balance sheet, he has a capability to expand. Both geographically as well as vertical wise, because majority of the work is done in house. He has a good asset base as well, and so since he's not doing the subcontracting job, he has a first hand experience to handle the entire project. So definitely I believe this is one counter he can look at entering into the space.
With this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first question is for you, Kunal. This one is from Satyan from Kerala. Bought 300 shares of ITC, but at a price of 476 rupees. At a loss right now. What are the future? How are the future going charts looking like on ITC?
I would recommend a hold on the stock, but not to add at current levels. I believe that the stock is going through a time-wise consolidation, which may take at least another couple of months, if not more.
Another one coming your way, Kunal. IRCTC 25 shares at 680. RS has bought this counter, wants to hold for more than 1 year. Does it make sense?
Absolutely yes. I would recommend a hold on IRCTC.
Okay, Kunal, this one specifically for you from Geeta from Dubai, holding 100 shares of HUL from a price of 2,316 rupees. Worth holding for the mid to long term, and can she add more at current market price?
Only if you're a long-term investor. By that I mean at a time frame of 2 to 3 years. Only then it makes sense to hold on. Otherwise, good time to exit.
Okay, Sujit Dispute has written to us. Neha, NCC 700 shares at price of 28 rupees per share. Should he continue to hold on to it or book profits? The stock's at 158 now.
He can partially book profit into this and continue to hold the balance 50%.
Okay, Sneha, what's your advice on Fortis Healthcare? Venkatesh wants to know, good time to enter this particular counter with a 3-year investment horizon?
Would suggest Medanta or Max Healthcare in this space rather than Fortis Healthcare.
Kunal, Dasaradi wants to know about Sri Renuka. Should he buy right now for a period of 6 months, 1,000 shares?
I would recommend to go for Balrampur Chini. That's a much better alternative.
Okay, Kunal Balakrishna wants to know the future of Amrutanjan. Can he enter at current market price? Do you track this one?
Don't track this one, but then would not be recommending a buy at current levels.
Alright, and with that we come to the end of the rapid fire as well as the query segment. Thank you so much Sneha as well as Kunal for joining us on the show, giving us a take on the power sector and as well as resolving queries. And viewers, with that we are totally out of time in this edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself and the team that put the show together. Stay tuned, Markets at Noon coming up next.